Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. After many challenges above the 69-cent handle, you can see that the market is clearly broken down after, on Friday that is, taking out 68.60. With the bearish divergence starting the whole move to the downside and also with the failed rejection levels around 69 figure 35 with a post and high twice at around 28 to 29, the market is destined now to break down and look towards 68.25 now that we have broken 68.60. It is assessed, though, that from the technical implications, just becoming to the marriage of the RSI to the MACD should furthermore give further weakness to 67.70 before initial profit taking likely to return back to the Australian dollar. The euro continues its bearish path, and as it takes out support after support after support, there's now that from 110.65 looks towards 110.05 as minor support, which is nearly upon it, and likely to see further pressure to target the 109.50 before seeing profit taking coming back into play. Resistance on the day seen at 110.65. Dollar yen, well, there's a bit of a question here about how the market is actually playing to this topside resistance at 109.20. It is assessed we are weakening to the fact that there is divergence here. This triangle and also the MACD being flat does give indication that I feel the market will slip towards 108.85, and a break beneath there would reinstate the bearish case and therefore look towards a target of 107.85 to 108 the figure. Nevertheless, the targets are in place here, and I do expect to see further weakness into this week. The pound slipped further on Friday and took out the level of 127.85, and now questions whether the market has broken down. I do believe, though, that we are seeing further risk to the downside and therefore looking from beneath 127.85 to target the region of 126.55 to 75 and reassess from there. Gold still weak and continues to break levels even to the fact of 1,460 on Friday after posting a fresh low of 56. It is now time for the bulls to return. As we're just climbing above 60 now, I do expect to see a rise up towards the level seen at 66, maybe up to 72, but needs to break 72 to reinstate the upside to around 80 to about 90 as a target. If we close under 60 today, then we could see further risk to the downside, but I feel the market is just starting to claw back its losses. The trigger level to the downside is seen at 54. Beneath there would give further scope to the downside. Wrapping up with oil, well, after 5 attempts at this topside 57.55, the market is still chipping away at the resistance after taking a short brief drop on Friday to 55.69. It is assessed, though, from the bounce that could see further risk to the upside. What's making the market very jittery at the moment is on Thursday, multiple reports suggested China and the US were ready to scrap tariffs as part of a phase 1 deal. However, it wasn't long before those reports were squashed after Donald Trump poured cold water on the idea that Washington and Beijing had agreed to roll back tariffs amid the trade wars between the two sides. Furthermore, Peter Navarro also said, who's a senior US trade advisor, that there is no formal agreement in place. So the market is now scratching their head in what's to come next. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to this new week.